Hello everyone, welcome to today's video. This is the first ever video of Financial Crime Lab. In this video, we are going to talk about money laundering key concepts that everyone should know. In this video, you will learn about the definition of money laundering and the stages of money laundering. We will also discuss about the history and origin of money laundering and take a closer look at the evolution of money laundering techniques. Then we will show you an example of money laundering stages. Then we will talk about the economic and social consequences that money laundering has on our society and as a country. Then we will also discuss about the key takeaways from money laundering that we are going to learn from this video. Finally, we are also discussing what is money laundering, what is anti-money laundering is, and what are the key international and global AML safety bodies and the AML frameworks that all the countries follows. So let's start our video. What is money laundering? By definition, money laundering involves generating criminal proceeds and concealing their illegal source to use the funds to perform any legal or illegal activities. To simply put, it's the process of cleaning the dirty money into a clean money, which will enable a money launderer to use the fund in legal or illegal transaction. Always remember that money laundering involves a first line offense, which is known as predicate offense. It can be fraud, trafficking, bribery, or smuggling. So, money laundering is a second line offense. The singular objective of money laundering is only to make profit and it is in circular shape. There are three stages of money laundering: placement, layering, and integration. And as you can see from the picture below, we have highlighted a flow chart where you can understand how money laundering is done. Initially, there will be a crime, then the funds will be generated and will be placed into the banking system, and finally there will be investment. And this is basically refers to the entire cycle where in the first cycle there was, let's say, person A who has done the crime, who has done a specific crime. Then in the last stage or last cycle, the same person remains who will be having the clean fund at his or her disposal. So this is a typical cycle of money laundering. This This table basically discusses about the history and origin of money laundering, where you can see that the first era was 1920s when Al Capone, the notorious gangster, made huge profit from selling illegal alcohol and narcotics. And from his business empire, he generated a huge amount of cash and funneled it through legitimate businesses. One of the popular method was using coin launderers, and this led to the term money laundering. Then, after 1930s, organized crime groups had started to expanded the money laundering methods and use different types of techniques like using casinos, real estate, and offshore accounts to hide the origin of the fund and make the dirty money into a clean money. In 1970, USA introduced the Bank Secrecy Act, which is very popular and known as the BSA Act. And this act required all the banks to report large or suspicious transactions. In 1980s, countries from all over the world and governments from all the countries, especially the significant ones like United Nations member countries and G7 countries, realized that proceeds from drug trafficking was heavily laundered using different money laundering schemes. So they started coordinating their efforts, and as a result of it, in 1981, FATF was established and Vienna Convention was arranged and held in 1988. We will discuss about Vienna Convention and FATF in our later part of the video. Finally, the focus shifted from money laundering to terrorist financing, crypto laundering, and there has been a huge change in global regulatory compliance. And this is we are talking about after 2000. And in 2001, Palermo Convention was held, which was basically held and arranged to combat transnational organized crime. Now we are going to discuss about the evolution of money laundering. You can see the early origins from from which there were rise of organized crime. In early origins, ancient civilizations also used methods to conceal stolen wealth. And as for the rise of organized crime in the 20th century, different crime syndicates were formed and they had legitimized illegal profits through laundering techniques. In 1970s, legal frameworks were introduced such as Bank Secrecy Act to combat money laundering. Then after that, the launderers were became smart and introduced global techniques to launder funds, such as exploiting the international banking and offshore havens. Finally, the recent developments suggest that stricter regulations were in place. However, there are still challenges from different angles, such as cryptocurrencies emerged. This is basically a visual illustration of three stages of money laundering. The three stages of money laundering includes placement, layering, and integration, where placement refers to the initial introduction of funds into the financial system. Layering refers to complex or web of complex transaction, which will ultimately obscure the origin of funds. Finally, the integration stage will give the dirty money appearance of legitimate fund. This slide basically includes the definition of all the three stages of money laundering. Placement stage basically refers to the stage where illicit funds are introduced into the financial system, and money launderers can done it through various methods such as depositing cash into banks. Layering stage basically involves creating complex web of financial transactions, which will obscure the origin of the fund or the source of the fund. And this can be done by transferring funds between multiple accounts or making investment in financial instruments or using shell companies. And the final stage, integration, this is when the laundered money will be reintroduced into the economy in a way that appears legitimate. At this point, all the funds can be used for legal investment purchases or any other financial activities without raising an eyebrow. So, the integration stage allows all the criminals to enjoy the benefits of the illicit gains while maintaining a facade of legitimacy. You can look at this image where we have showed how money laundering is done using the three stages. And here is a step-by-step breakdown. Let's say uh, in placement stage, a criminal whose name is A buys a small business like a car wash or restaurant and deposits the drug money proceeds into a bank account, which will be inflated daily revenues. Then the criminal A will move all the funds through his or her multiple bank accounts and purchase assets in offshore jurisdiction. He or she also try to use shell companies to confuse the paper trail and the money trail. And finally, in integration stage, the the money that has been cleaned, it will be used in investments such as real estate, luxury cars, or legitimate stocks, which will appear as clean and lawful income. As a result, criminal A or the drug dealer can now use the clean money to live a lavish lifestyle, while the law enforcement agencies will struggle to trace it back to the original criminal activity. Now let's discuss the economic and social consequences of money laundering. You know what? When money laundering happens, we will experience economic consequences. And what are the economic consequences that we will face? Money laundering will distort the financial market. How? It will cause asset bubble, unfair competition, and inefficiencies. Then we can see money laundering will undermine the legitimate businesses. As you know, front companies are used for money laundering schemes. So criminal organization may use the laundered fund to undercut prices or dominate market. There will be loss of government revenue. Money laundering will evade taxes, reducing public funds for infrastructure, health, and education. There will be also capital flight, which indicate the fear of instability and corruption may drive the investors and legitimate capital out of the country. Finally, money laundering will weaken the financial institution within the country. As a result, the banks may face reputational damage or sanctions if involved directly or indirectly in laundering. So the social consequences of money laundering, there will be increased crime and corruption, public trust will be eroded, terrorism will be high, and the social development will be reduced at a significant low. Finally, money laundering will threaten the rule of law. So, what are the key takeaways from money laundering? Money laundering will promote crime and corruption. It will halt the economic growth. Perpetrators or criminals will exploit the institutional loopholes, and this is a very significant one that all the countries, government agencies, and law enforcement are trying to address. Therefore, financial system will also be undermined from money laundering. And to combat money laundering or terrorist financing, agency collaboration is very, very essential. Since we have discussed money laundering and the key concepts surrounding money laundering, now we will discuss about what is anti-money laundering. Anti-money laundering refers to a set of laws, regulations, procedures, controls which are designed to prevent criminals from disguising illegally obtained money as legitimate income. The key objective of AML is to detect and report suspicious financial activity. However, to establish these two things, we have to monitor the financial activity of the clients of financial institutions or banks. Besides, to prevent the use of financial system for criminal purposes and deter crimes such as drug trafficking, terrorist financing, tax evasion, and fraud and corruption. Now, you might be thinking, why does AML matter globally? Because AML strengthens the financial integrity and supports national security. It also builds trust in banking and business environment and aligns countries with international standards. So, what are the key international bodies for AML safety that are in place to combat money laundering and terrorism financing? The key players or major international board AML safety bodies are FATF, Egmont Group, IMF, World Bank, Basel Committee on Banking Supervision, Europol, UN Security Council, G20, G7 countries, and UN Office on Drugs and Crime. Among these international bodies, FATF basically sets the global AML safety standards and conduct country evaluation. These country evaluations are known as mutual evaluation. Egmont Group is one of the important major international AML safety bodies because it includes a network of FIOs that share information and best practices among them. Then comes Basel Committee on Banking Supervision. They basically provide AML safety guidance for banking regulators and promotes financial sector soundness. Then there are IMF and World Bank. Both of them integrates AML safety into financial sector assessment and offers technical assistance. And World Bank basically support countries in building AML safety frameworks, risk assessment, and capacity building. As for Interpol and Europol, they basically assist the law enforcement agency in tracking and investigating financial crime. Europol, on the other hand, supports the EU member states in criminal intelligence and investigation, including AML safety. And UN Security Council basically enforces the targeted sanctions, terrorist financing measures through binding resolution. Now, what are the key international AML safety frameworks that we must know? First of all, there are FATF 40 recommendation, which has been issued by FATF. Then there are Vienna Convention and Palermo Convention. Both of these conventions are very important, and we have also discussed in our earlier discussion. Vienna Convention was against Vienna Convention's agenda was against illicit trafficking of narcotic drugs. This is the first treaty which was being done to criminalize money laundering from drug trafficking. Then in the 2000, Palermo Convention was held and it basically expanded money laundering money laundering to organized crime proceeds. Then UN Convention Against Corruption was also held, which is also known as Merida Convention. It the focus of this convention was on corruption related laundering and asset recovery mechanisms. Then Wolfsburg Group principles were issued, and year after year they have issued different kinds of principles and standards for AML safety measures. Basel on banking supervision basically set AML safety principles for sound banking supervisions. As for European Union, they have issued 6 directives, which are known as the European Union AML Safety Frameworks, and requires all member countries to implement those the framework, policy, procedures, and controls in their AML safety framework. Then there are also Egmont Group principles. Along with this, there are UN Security Council resolutions and Financial Action Task Force style regional bodies, which basically helps in implementing FATF standards. So we have come to the conclusion of our video. If you want to stay compliant, stay informed. So thank you for watching this video. We hope you found this video informative and valuable. Every week, we will be publishing new videos on AML case studies, compliance training. We also help people, our compliance professional, in preparing CAMS, CFE, CGSS exams. So if you have liked the video, please hit the subscribe button and do not forget to comment your thoughts or question below. And finally, if you love the video, share it with your friends and family. Thank you so much.